is moderating, and I think you probably read about the most on the invite. I'll just let you take it from here.
Thank you, Vera. Can everyone hear me? Well, thank you guys. And the weather is pretty rough out there, though I think it's gotten better. So thank you for all of you for coming here and attending this session. Good to meet you. My name is Wameek Noor. I work at CGAP, which is a consultative group to assist the poor. We are housed at the World Bank. We are an independent think tank that advances financial inclusion to improve the lives of the poor. And we do a number of different things. So we're basically a global partnership of 34 organizations that have a common mission to advance financial access. We work on, supply side and demand side issues, looking at, from the customer's perspective, demand side, what are the customer needs, preferences, etc., to supply side, what is the business case for the providers, as well as looking at policy and regulatory issues. What is the role of government? What are the risks? What are the opportunities? And we do a lot of kind of frontier research along those lines. This panel is technology and financial inclusion. We have a really esteemed panelists with me today. I'll briefly introduce them. So Rishabh Khosla on my left, he's a senior investment analyst in Axion Venture Labs. Paul Nelson, he's part of the digital finance team at USAID. And then we have Hamilton McNutt. Did I pronounce that right? Hamilton?
Double T, yes.
Double T. He's with the Net Hope Payments Innovation Group. So maybe just to get started, you guys could introduce yourself, explain what you guys do, and just broadly your perspective on technology and financial inclusion. Hamilton?
Sure.
Testing? Okay, hi. Hi everyone, thanks for coming out. Thanks Wameek for calling me esteemed, that's very nice. My name is Hamilton. I work with, I have a few emails. So I have a consulting group called Strategic Impact Advisors. We're women owned, so my CEO Shelley would not be happy with this panel right now, but we have to move on from that, I suppose. And we work very closely with Net Hope. And Net Hope is a member organization of 43 NGOs, and it really just focuses on ICT and how NGOs, both in the back end and the front end, are using technology in their programs and operations. So the particular work that we do focuses on payments and how organizations are making payments. We are not fans of cash, so we look at digital alternatives to payments, which are assumed to then lead to what we're here to talk about today, which is financial inclusion, so getting people, onboarding people onto a digital platform. Digital payments platform is often seen as one great way to introduce them to a variety of other financial services. So I'll leave it at that, and I'm excited to be here, and again, thanks for coming out.
Thank you.
I'm going to try and keep this short. I tend to rattle on, as you will see through the rest of this panel. But I work with Axion Venture Lab, which is a part of Axion, which you might have heard of, is a large global nonprofit that invests in microfinance institutions and then supports them and grows them and builds them with various layers of technical assistance and leadership development. Venture Lab was founded a couple of years ago on the thesis that technology, startups, and this whole impact investing trend that we hear all about are driving particular innovations around financial inclusion that we could really support and get behind and bring to scale. So we invest in seed stage financial inclusion startups all around the world. What does that practically mean? It's a lot of alternative lending, payments, mobile financial services businesses, and then a whole layer of data analytics and support services that help other financial institutions do what they're doing better, faster, cheaper, more efficiently. What else can I say in these as I begin my ramble? I guess I'll tell you a couple of things that I'm excited about around financial inclusion. Three things that I think are really interesting about how technology is changing financial inclusion. One is it's opening up all sorts of new data that we can use, whether it's people getting on the internet, starting to use mobile phones and smartphones. We're starting to be able to tell a lot about people, and fundamentally that's what finance is, right? Matching capital with people who we can tell with some level of certainty that this is their willingness to repay or this is their ability to take these financial services. So data, channels, new ways to reach people, whether it is through the mobile phone, whether it's through the internet. For the first time, we can reach people in the most remote areas, while at the same time getting the right data that we need on them to be able to make, say, a lending decision. And the last innovation that's really exciting around financial inclusion is the emergence of platforms and marketplaces that are connecting and disintermediating traditional intermediaries in financial services and bringing the holders of capital closer to the demanders of capital and fundamentally lowering cost in that way. That's all I say for now.
Hi, so my name is Paul Nelson, and I'm not Kay McGowan, who leads the digital finance team at USAID. I think in broadly 2 dimensions you could describe what our interest is in digital finance. Number one, looking at it as a potentially transformative channel for leading to deeper financial inclusion. And number 2, looking at it as a potential contributor or facilitator of sector-specific development outcomes that we care about as an agency. Agriculture, health, education, energy, and you go on down the line. It's potentially a component to resolving things that implicate finance in each of those areas. I think for me, one thing that I'm excited about is more competition in the delivery of services that up till now had largely been the purview of institutions that didn't care at all about the people that could use the services, number one. And then number 2, I think the idea of using this as a channel to better pair the delivery of financial services to specific objectives that people have. So you talk about products like incubator, which facilitate the access of off-grid energy by using a pay-as-you-go solar product, and looking at how the introduction of the channel, but then also the business model of essentially consumer asset financing makes that business model work for a whole range of consumers that before would have been perceived as having too high a risk. So I think those are 2 things that we're definitely very excited about.
Thank you. So this panel session is very informal, so although we have a question and answer in the end, please do feel free to ask questions throughout this discussion. And this also includes the panelists that are here with me today. Please feel free to just kind of informally chime in and discuss and debate amongst each other. So it's really interesting what all of you do, and I would love to kind of get a sense of what you think are some of the most promising innovations in the technology and financial inclusion space, and 5 years down the line, where do you see this might be headed? So in more concrete terms. Does anyone?
So I think my predictive powers probably aren't that good, but last week we were talking amongst so somewhat similar to the guys up here. I work on a team, the digital development team at USAID, which looks at how can we use technology more effectively to achieve development outcomes. And someone on the data team was talking a little bit about how we're approaching this from a systems change perspective. There are a lot of different actors that have a lot of different roles. We aren't going to be scaling, quote unquote, the growth of financial services directly, but instead we aim to facilitate the growth and the private sector investment that would lead to that growth. And we were talking about, well, how do we articulate our role in leading to those sorts of outcomes, those financial inclusion sorts of outcomes, the higher household income outcomes that may be very tenuously connected to our work. And in the short term, what you may see more is some of these, he was talking about it in terms of data, he was talking in terms of linear outputs or products of our efforts, which might be in finance, more efficient payment delivery, more transparent payment deliveries, not necessarily the longer term second order impact of household income increasing or people feeling like they have a greater stake in their government, for example, by having improved service delivery.
Yeah, I think these sort of digital financial plus innovations that Paul mentioned, like M-COPA and CGAP works on, are fantastic in markets like Kenya and Tanzania, where there's been this channel and it's more robust and ubiquitous and people are using it in the tens of millions. And it is fascinating and is innovative. But from a NGO organization, we work in a variety of very difficult markets. So I think what's exciting for me is that, especially through a variety of different channels, the NGO sector as well as other larger organizations are sort of starting to push for solutions for their payment needs, their needs to actually provide money, get money out to very rural areas. So what that means is there's demand that hopefully supply will catch up to, and so I just got back from Ghana, and the service providers, there's 11 or 12 service providers there that work in sort of the digital financial services space, but the products are still super basic, first generation, 1.5, if that, and showing them that there's this market for them excites them as well. So we did a training, we had 20 organizations there all saying we need X, Y, Z, and these service providers' eyes lit up. So I think that's exciting, is that they're starting to get jealous of Kenya and Tanzania, so they're like, why not here? So.
Well, I guess that leaves me. So I'll answer your question specifically. What are some concrete examples of innovations we're seeing? And I'll focus just on data as an example. So one innovation we've seen is as the developing world or the emerging world gets onto e-commerce, the way it's emerged in these kinds of markets is very different from the way we think of Amazon here in the US. It's much more like eBay, where small independent retailers are coming on to this marketplace and individuals and small businesses are buying on the other end. What that means is that these small businesses still lack basic access to finance like any other offline small business. But now that they've come online, for the first time we can generate verifiable data on these people. How many people are buying from them? What are their average seller ratings? How many turns of inventory do they do on average? And all that information is completely new, and we never had it before, and now we can use that information to start making lending decisions. This is a model which we've seen validated in the US with companies like Cabbage. Alipay, which is just a small part of Alibaba's giant business, has also been doing this in-house for their lenders, and now in India we've seen a couple of big players start to move into this space as well. Just one example. The other thing I think we're really excited about, looking forward to the next year and the year after, is the idea of the consumer now becoming the holder of that data. For a long time now, we've heard of this big data revolution, and a lot of it has been sort of under the hood, sort of in a black box between financial institutions and these providers of big data, who, whatever information they provide to the financial institution, the consumer has no sense of that. But we're seeing a lot of innovation globally, from the US to India to Latin America and Africa, taking that information, putting it in an easily readable form for the consumer, actually having the consumer volunteer data linked to bank accounts, linked to your e-commerce sites, provide that verified information that then can be used to get access to other services through a marketplace, say. So a bunch of banks can line up and provide offers based on that real-time data that the consumer is uploading. And the final example, to go to Africa, where you were talking about sort of where really it's one of the few parts of the world where the mobile payments ecosystem has really taken off and is robust enough to actually be a channel for delivering products, as well as then be a source for good data. So one of our companies, Kopo, is started by enabling merchants to accept mobile money as payments, just like any merchant online in the US accepts PayPal. But over time, they realized that we have so much good data on these merchants that are making payments through our system that we can actually use that to deliver merchant cash advances. So basically small microloans to these small merchants through the same pipes that they're doing the payment transaction on. So just a couple of examples of how this is working in practice.
Thank you. So it seems to me that a lot of the innovations that we're talking about, it's centered on the mobile phone. So it's sort of the inherent capabilities of the mobile phone and what it offers. Would you agree with that? Should there be a focus on using the mobile phone and the harnessing of its power to look at these kind of frontier innovations, or should we maybe have a broader perspective and look at other kinds of interfaces and channels?
So I think for USAID, we're present in something like 80 countries around the world, and they all have different rates of penetration for ATMs, for POS, for mobile phones, that sort of thing. And so a couple of years ago, our team actually used to be called, when it was first launched, the mobile banking team and then the mobile money team. And kind of in recognition of the fact that that won't necessarily be the winning channel in any given market, we adopted the term, which I think a lot of the sectors kind of gravitated to in the last 2 years, of digital finance. And technology will always play a role, but what particular channel is kind of market specific, and even at a subnational level, it depends on what the service providers expect to do in the rural communities versus the urban cities, that sort of thing. So for us, it could be any channel. It could be card based. You look at some of the things that have led to a remarkable impact in India, for example. There's a study that looked at it was a card based with the biometric component shift from cash to digital payments. And this project looked at what sort of impact that had, and just by introducing that, they reduced the rates of bribery attempts or briberies reported from 47%. And there was no mobile component in that, so.
Yeah, it's interesting. I mean, I would say I generally agree with that. I think the mobile is extremely powerful as a channel and as a source of data, but every market is different, not just in adoption of mobile phones, but things like smartphone penetration versus feature phone penetration versus the competitive structure of the mobile operators. I mean, arguably the reason why mobile money took off in Kenya first was because of the very unique structure of Safaricom, which controls 80% of that market, right? So you can't reliably rely on the mobile phone necessarily, and it does become market specific. That being said, I think it is one of the most exciting tools we have now in our hands. And what particularly excites me about the mobile phone is that, and I'm just going to throw out a prediction here, but in 2 years, the vast majority of the world will be smartphone penetrated. So all these questions that I know we agonize over as investors, what is the actual smartphone penetration rate? What is the addressable market of this potential innovation? These become moot points. And I know Paul Breloff, who founded Venture Lab, talked about when he was first pitching this concept of Venture Lab, and he talked about how internet and mobile was going to drive innovation in financial services in emerging markets. People looked at him like he was crazy. And in 2 years, the world has completely changed. People know Facebook before Google in emerging markets. It's just a completely different world today from what it was 2 years ago, and I think it will be a very different world in 2 years as well.
Yeah, I would tend to, I would look into this. If I need to go somewhere, I'll open up Uber first, and then I'll go to Lyft, right? So it's sort of like, okay, mobile, see if it's working, because it's more ubiquitous, check it out first. And then, look at cards, look at other channels, if mobile's not gonna be the one for you, mostly because it's going to remain. Mobile phones will stay in people's hands, and they'll continue to be a tool, whereas just as an example, if you're looking at a card-based payment system, if it's a cash transfer program and people are providing cash on monthly stipends, or a welfare program where people provide monthly stipends but only for a finite amount of time, usually they'll be using, in many examples, they'll use a closed loop to card system, which they'll bring in and then they'll take out once the program's done. So I just feel like mobile will provide more access points. Cards require point of sale terminal, NFC, a bit more hardware as well to facilitate the payments. So I would say, mobile, check that out first, and then look at other channels.
I think it also depends on what is our objective. So if our objective is simply to digitize payment flows, so let's say if we look at government payments, we want people to be able to receive and then receive their payments directly into an account that's tied to a debit card that they have, and that's it, then a card would be, assuming that there's adequate penetration of ATMs and POS where they can cash out, then that would be totally fine. But I think all of us, we have an objective that looks beyond just that. We look to these, the digital finance plus sorts of services that are only possible through the multifunctionality of a phone. Even not just smartphones, but the feature phones and the basics and handsets that a lot of people still have and will have for a few years. And so, as long as we have those broader objectives, then if we have an option, then certainly that would be the route we go. That said, I should also mention though that obviously with the popularity of Square and other sort of miniaturized POS in the US and in Europe, it's not as if the card paradigm is closed off to innovation or game changers, and so who knows, maybe something like that will still make card-based innovation feasible in emerging markets. But at this point, if you're looking at what technology device has the greatest ubiquity, it's the mobile phone.
And just to add on to this, I mean, I think the mobile phone is most closely associated with payments because it is a replacement for, the analogy of traditional POS, card-based POS to mobile payments is very similar to, let me just, putting aside the payments thing, I think the importance of lending is also something we shouldn't ignore, right? And lending is really not something we're seeing a lot of mobile-related innovation because it still involves a lot of consultative thinking and talking. Most of the lending companies we've invested in are either fairly offline in the way the sales manager interacts with the prospective borrowee, or they're fully internet-based because you need more real estate, you need more information, you need more interaction. And that we still haven't quite cracked on a mobile phone. So,
sorry to keep going on this, but this also just reminds me that, when you think about the US and the rise of card-based transactions, more recently, people have access to the internet, which allows them to manage their accounts online and to see where do I stand, when is a payment due, how much balance do I have, what's my transaction, what's my credit limit, that sort of thing. And even if you don't have the internet, you can still do the same thing in your bank because we have a lot of banks around. We also have a lot of ATMs around. We also have physical addresses where that sort of stuff can be mailed by paper, whereas in the developing context, if you just have a card, how are you going to very easily or privately going to see where you stand? You could go to a POS, you could find out that way, you could have to go to the bank to find out that way, but when you think about it, exactly, and so it changes I think it changes the degree of empowerment that people would have in adopting a new type of financial service than what they would be able to accomplish with a mobile phone.
I'll just add on to that because we're adding on to things. I think the key is multi-channel engagement here, right? And that I think we're going to continue to see mobile will be very important, but not the sole channel.
And I'll add on as well.
And just to mention, you guys can also add on.
Just on that microfinance institution or lending institutions tapping into the mobile channel. I've seen a few mobile-based MFIs that have popped up. One of note is Banco in the Philippines. I'm not sure if you've heard about them, but I don't think that they want to replace that face-to-face time because it's crucial, right? But it does provide lendees a bit more flexibility in terms of payments, and then also a channel for text messaging, communications outside of their spending money to send out agents into the field. And I don't know, I haven't looked at this, if perhaps those savings in terms of, you know, sending agents out in the field, gas, all that, could be translated into lower interest rates perhaps, or just something else that, you know, clients might appreciate, especially the more experienced clients that don't necessarily need as much face-to-face interaction.
Actually, it's interesting that you mentioned that. I mean, we've seen a lot of companies, not just with the servicing of the loan aspect, but in the lending operations, helping other microfinance institutions go more digital with their field force. So we're not talking about the consumer's mobile phone, we're talking about roving agents who are fully digital.
Yep.
That tremendously reduces cost, increases efficiency, which then can be passed on to various, you know, the end customer or whatever.
Yeah, we have one question.
So you have the platform.
Maybe if you could just quickly introduce yourself and where you come from.
Puya, DC-based, working on a cultural exchange via recipes and culinary-based. The social enterprise that's what we're trying to stand up. So you have a platform mechanism and currency issue that as you're trying to move these transfer of funds and such. Do you see Bitcoin playing a role in this in the future?
We see a Bitcoin-enabled remittance company every week. I think our official perspective on it is that as long as, our perspective again is from how is this going to aid BOP access, right? That's fundamentally where we're coming from. We think there is a role for Bitcoin and other cryptocurrencies writ large to reduce some of the operational costs for a remittance company in the back end. Because it clears instantly, and there's none of that needing to hold a day's worth of transactions on one end. So it frees up working capital, which ultimately enables you to lower costs. So we think that's the Bitcoin play. Fundamentally, I think the consumer on the sending side, but especially on the receiving side, has to feel like everything has gone as normal. And most of the smarter companies we're seeing are delivering that transaction directly into, say, an M-Pesa wallet or directly to an ATM with a bank partner. But that transaction, where you convert from Bitcoin into the local currency, still entails a fair amount of cost. So it's not zero cost, instant, as I think we would imagine Bitcoin-based remittances to be.
I think Ripple's another maybe. You know, Bitcoin's probably, I was at a panel a couple weeks ago and someone from, I think, the Bitcoin Foundation said, well, we're really at a 0. I think the version's 0.92 or 3 right now, so they're not even at a 1.0 stage of development, and you can kind of see that in some of the challenges they've had with volatility and kind of this, the delicate aspect of the relationships they have with governments, trying to increase support and that sort of thing. Ripple's interesting because it's essentially, if you step back a bit and you look at, well, what are the common elements, or what would actually have staying power with this sort of model, and it's the cryptographically based currency that facilitates the authentication of transactions. And I imagine that might have some staying power. And what's interesting about Ripple's approach is that they focus just on that, on improving the efficiency of the transactions and doing so in real time. And their play seems primarily be not to replace fiat currencies like the dollar, like the euro, like the pound, but instead to facilitate the transaction of any sort of unit of value, whether it's loyalty points, a fiat currency, or Bitcoin in this case. And I imagine that'll probably grow in popularity, but I think there's so many unknowns with respect to both of those that it's hard to say really how that'll play out in a developing world context.
So there's a lot of other organizations popping up around cryptocurrencies. Stellar is another one, I don't know if you've heard. They're interesting as well. And I think that more will come to light around how to utilize these, but it's really great for remittances right now, I think, is the key sort of use case that people are seeing. I was at dinner with some friends and his parents, so I was trying to explain to his 7-year-old father what Bitcoin was and how it was used, and I really couldn't give a good use case other than it's cheaper than Western Union, or it's cheaper than MoneyGram. So that's in part because I don't know as much as I should about Bitcoin, but also just thinking about it right now, from a user sort of friendliness, you know, I've got my app, my coin app that I have my one Bitcoin on, and it just sat there because I don't know really what to do with it. You know, so.
It's like the cloud.
Yeah, exactly, exactly.
Question in the back.
My name is Rosa Ramirez. I'm interested in Latin America. I'm a journalist. Any of these innovations that have popped up in Latin America that you would want to highlight, or that you are, you know, that you think is worth taking a look at?
One that I think comes to mind, and I don't know if innovation is necessarily the right word for it, but you know, we were talking about remittances and how there are large remittance flows from the U.S., from Canada, from Spain into Latin America. Haiti is a prime example of that. I can't recall the exact percentage, but it was something like 20% of GDP is roughly what the yearly remittance flows amount to. And there the question is, well, not just how do we make remittances more cost efficient or more affordable for people so they get a larger percentage of the funds that they remit into the hands of the people that they're sending it to, but then from our perspective, the question then also becomes, how do we use that transfer of value to facilitate the increase of access to other financial services that people in Haiti still need. So I may get funds that my family remits to me through a Western Union agent, but if I'm just cashing out, then there's sort of a missed opportunity. If the funds arrived in Haiti electronically, then what do we have to do to keep them in electronic form, i.e. in a bank account that's associated with the name of the person that I'm sending it to? And so there's one company called Boom Financial that is in part owned by Digicel and also an American tech company that basically looks at depositing funds directly into a bank account in Haiti at a credit union, and which basically would facilitate the ability of people to keep funds in digital form so that they don't necessarily need to cash out right away. They can keep a portion of it in an account. And you know, getting to what are some of these other sorts of ideas that we hope to see bear fruit longer term, maybe that'll build up the transaction history that would be necessary for them to seem like an adequate, a viable option for extending credit from the credit union that they now have a bank account with.
I can't emphasize how important keeping cash digital once it's been digitized is, because if you're just going to cash out, it wastes the entire point.
Yeah, it's a big part of the battle.
Sorry, go ahead.
It's a big part of the battle, and then people talk about that and also in the context of G2P as well.
Yeah. I guess I'll talk about a couple of innovations within our portfolio, and then two that I'm pretty excited about more generally. And I'm not the Latin America expert. If you're interested, my colleague is in the corner over there, and she knows everything about what's new and what's hot in Latin America. But two companies.
What's her name?
Jackie. Jackie, raise your hand. There you go. My whole team is there judging me. I did remember the analogy that I forgot earlier, so in case anyone's wondering. The two companies in our portfolio, one is called Kippy. On the subject of remittances, they've actually developed a model where the fee is $0, and what they're sending across borders is gift cards. Gift cards that can be redeemed at local grocery stores, local department stores, and the way the company makes money is actually by getting a commission from the retailer. So it's completely free to use for the sender and the receiver. Really, really interesting model, starting with the sort of California to Mexico corridor. The other interesting company in Mexico is a lender we invested in last year, focusing on small and medium enterprises, fully digital, fully online. It's a website that makes automated and quick lending decisions based on whatever information it can pull from credit bureaus and other official sources, but also alternative data sources such as your social media footprint and whatever is online, really. Those two are in our portfolio. Two companies I'm pretty excited about. One is called Destácame, which is, I referenced an earlier idea of the consumer beginning to be in control of their data and having almost like a Google ID, but your personal financial ID. So Destácame is working towards that. One of a number of companies around the world that are along this trend. And then the fourth company is one in Brazil, which across Latin America, one of the big trends is governments are beginning to mandate that all businesses offer digitized receipts and invoices for anything they are buying and selling. So suddenly we have the ability to see the entire digital trail of buying and selling across every value chain in these countries. That is, again, that gets me excited because it's just amazing amounts of data to make lending decisions where there was no information before. And we're seeing companies that are starting to access that data, collate it, make sense of it, and then offer lending products to the businesses, but then also offer investors, and this is the idea of marketplaces and platforms, offer investors the opportunity to, like Prosper and Lending Club in the US, actually invest in those loans that are being extended. So just a few of the innovations, but if you're interested, definitely talk to Jackie.
Yeah, I would also just like to, I think what's interesting specifically in Mexico, what they've done is really strong distribution networks for banks. They've tapped into fast-moving consumer good companies like Bimbo and have done a variety of other things to extend and basically cut costs of their reach to the end user, which is really has sort of taken out sort of this mobile money aspect. Well, the banks are sort of the key player in Mexico and a lot of Latin American countries because it's just point of sale terminals are usually more robust there as compared to Africa. And then the banking sector is doing interesting things on the distribution side and getting you know, branchless banking, as you would call, out into more rural areas.
So I think what's interesting is that there seems to be a lot of opportunity, not just with the basic payments platform, but innovations that are leveraging on the basic payments platform. In particular, we've heard about the potential of, you know, digital data and what it can do and how it can change the value proposition for not only the business, but also for the customer. But, and I think, I mean, it's worth mentioning a couple of numbers just to note the opportunity that's there. I mean, we all know M-Pesa, that's what, from what I understand, about 13 million customers in Kenya right now. bKash in Bangladesh, which is another mobile money platform, 16 million users. So these are pretty big numbers. And what's interesting is some of the kind of innovations riding on that. M-Shwari in Kenya, I'm not sure how familiar you guys are with that, but it's essentially offering a liquidity or credit offering based on, you know, your M-Pesa usage and patterns, housed at a bank, and that, as of what I heard last, has nearly 10 million customers. So out of 13 million customers, 10 million are using M-Pesa, 10 million are using M-Shwari. So these are big numbers. They appear to show success in a number of markets, but at the same time, in many other markets, we haven't seen the same level of traction. And, you know, we're really starting from stage one in terms of trying to encourage governments to even digitize a basic payments platform. So I'd love to hear from you guys and for your perspective in terms of what are the kind of challenges that you've seen, implementation challenges either on the commercial side or on the regulatory side, and would appreciate getting your perspective on what is not making it work in a number of these jurisdictions and why.
I think it's a complicated question, or a simple question with a complicated answer. And you know, I mentioned earlier, it's a systems change sort of goal that we have before us of how do we deepen financial inclusion through the use of digital financial services as a key driver, that paired with new business models. And that gets to the reality that you rely on service providers. Well, on one hand, let's talk about financial institutions who, again, it always depends on the country, so it's hard to generalize, but who historically haven't served the vast amount of people who don't have access to financial services, formal financial services, or people who access informal financial services but do so in ways that are inequitable to themselves, that aren't as timely as the need is, or a need requires, and that sort of thing. And they don't, early on there wasn't a strategic imperative to serve these people. There wasn't seen to be a business case. And so, you have to articulate that business case for them to see the point in investing in it. On the other hand, you have new entrants to the space. You have telecoms who do see people that just happen to typically be excluded people as a valuable clientele because they use airtime, they want to make calls with friends and family, they want to communicate with each other, and so they also, in order to tap into that demand, they have these massive distribution networks of agents, airtime agents, and that sort of thing. But they didn't have the legal permission to offer financial services that would resolve this separate need in the market. And so, on the one hand, you need to deal with the business case for service providers, which we can't, someone like the government of Haiti or the government of Kenya, they can't say, hey, you're going to serve these clients. There has to be a business case for that to happen. And then you have the government who needs to look at what is its regulatory framework and how does the status quo prevent or facilitate the investment in these new channels for delivering financial services. And one perfect example is just you allowing branchless banking to occur, allow agents to facilitate certain types of transactions that customers at a bank branch might normally perform, cashing in and out of their account, that sort of thing.
Yeah, I mean, I could talk for hours about this, so please shut me up if it talk for more than 5 minutes. But the way I always think about it is I compare India and Kenya. Why did this take off in Kenya so hugely, and why didn't it and still hasn't it? Although it's starting to change just about, why didn't it take off in India? And I'll just go through the lists, and you'll see why it's a multi-dimensional problem. I think you raised two of the most important points. Regulation, which in India for a long time you had to have a bank partner to be able to sponsor a mobile wallet. So it needed to be a joint venture between a telco and the bank. Problem one. Problem two is interoperability. In Kenya, like I suggested earlier, Safaricom can one day decide I'm going to have a mobile wallet, and the next day everyone has a mobile wallet and can send to 80% of the population. In India, with 5, 6, maybe up to a dozen telcos that don't talk to each other and don't want to talk to each other, that never happens. So for anything to be of value, you have to have 99% certainty that I can send to anyone, not just people on Airtel or on Vodafone or whatever. The other thing starts to get at, I believe, related to network control and structure, there's the agents below that. Again, because Safaricom can basically one day mandate all my agents who are critical in taking cash in, converting it into M-Pesa money, and then giving cash out when it's needed to be taken out. They can just be told one day this is what you're going to do, and if you don't do it, you're no longer one of my agents. If you say that in India, they'll go to the next guy. They'll stop serving Airtel. They'll just go and serve because they're not exclusive. Most telcos don't even know who their agents are. So it's just a very different prospect. And then finally, I think there's user aspects to this as well, right? Kenya is just more unsafe. And M-Pesa really took off during the elections when there was a lot of violence 2 cycles ago. People were afraid to leave their homes, and that was really the only way to send money. India doesn't have that fundamental sort of urban lack of safety problem. But what India does have as a problem is lack of literacy and basic numeracy. Most people in Kenya are able to send even SMSs and sort of follow basic contextual menus. That's not a sure thing in India. Still, especially in rural areas. So those are just some of the things I think we're holding it back. But I think what's changed now is first the regulators really started to see the importance of this and have done everything they can to ease this. They've introduced new classes of companies exclusively around payments, and they've been doing everything they can to sort of promote this. And things have begun to change very slowly. And I think things can change very fast because the other example I always look at is Tanzania, which 2 years ago had no mobile money really, and no one was using it. But in 2 years, a country with maybe 10 million more people than Kenya, maybe 15 more million people, has just as high a volume of mobile money transactions as Kenya does within 2 years. It's incredible to see how quickly things can change.
Yeah, I think it does start with regulations and regulatory policy, coming from usually the central bank or Ministry of Finance, who usually has the oversight over these systems. But that's boring. So I want to talk about after that, you got what everybody else has harped on, which is really distribution. It's that agent network. It's basically giving your end users a ubiquitous place to go and get services, a place to cash in, cash out, a place to send money, a place to just basically have these ATMs, that aren't really ATMs all over the country. So, M-Pesa can go to their agents and they can say you have to adopt mobile money as well as airtime. But then thinking about it from an agent perspective, the margin on airtime is so much more than the margin on mobile money. Being a mobile money agent, it's expensive to be a mobile money agent. I think I saw a study that said 70% of the costs are borne on the agent versus the actual mobile network operator. So I think that's a major barrier. It's just not, if you're not in a country like Kenya that has a monopoly, basically, the business case for your distribution network is key and difficult. So there's organizations like Microsafe that have the Helix Institute that's based in Nairobi, but they are doing a lot of work around training agents and looking at agent network training for mobile network operators and other branchless banking financial service providers that are interested in sort of expanding their distribution. But that's certainly I think the most difficult part, and the reason a lot of these deployments, there's over 250 mobile money deployments in the world, and I think, well, the new GSMA report's coming out this month, but last year it was, 11 had over 1 million active users, and that's not that much. 1 million active users isn't that much. An active user is once every 90 days, so that's, again, not too active, right? So, I think it's the distribution network's a big one to overcome.
I think.
So.
Oh, go ahead.
I think we have only about 10 minutes left, or about 7 or 6, 5 minutes now. So if you guys have, yes.
I'm Bob Hershey, I'm a consultant. What are you doing in using the internet to get together the funding for these things and get transparency?
And just to clarify, do you mean equity funding to fund the startups, or actual
all kinds of funding, and getting an economic consensus among the funders and getting them so that they talk to each other and reach a decision with economic consensus with complete transparency?
Yeah, I guess I'll answer the question just in terms of the marketplace lending model that we've seen emerge. Obviously in the US we heard of models like Prosper and Lending Club, which are fundamentally doing the disintermediating traditional finance, right? We're finding borrowers, acquiring them at scale, we're running them through an assessment algorithm using whatever data sources we can find, bucketing them by credit risk, and then we're packaging those requests for loans in a way that investors, retail investors, institutional investors can understand and make bets specifically on those categories. So I think marketplace lending as a way to sort of intermediate debt is extremely powerful, and we've started to see it emerge in other parts of the world. We actually invested in a company here in the US last year called Street Shares that's doing this, but in a slightly different way, where it's much more borrower-driven. Borrowers get to build a profile and actually talk about their business. They upload materials, and so a prospective investor can get pretty involved and feel like they understand and know the business. And that's the intention, to have people feel like they have an affinity with the business, and their initial angle is to focus on veteran-owned businesses. So they're targeting borrowers who are, and veterans in the US disproportionately run small businesses, and veteran funders are very interested in supporting those businesses. So our angle is, let's actually take the wraps off and show whatever we can, create affinities, And then actually what ends up happening is various lenders are bidding each other down to see the lowest interest rate basically get to make that loan. So it's a really interesting kind of Shark Tank meets eBay type model, which again, it's all happening without banks doing the jobs that banks have fundamentally failed at doing for a long time now.
Yeah, I think this is the last question.
Oh, okay. My name is Samar Chatterjee, Safe Foundation, and I'll address it to USAID, since I'm curious what their role in this whole thing is, because I figured the others who are in payment innovation team or venture lab, they figured out how to make money in it, so as consultant or whatever they're doing. But what is USAID's role in this? Are you trying to be a consultant like them, or is USAID providing seed money, which takes the risk out of it? Whatever. I'm sure in any new venture there will be losses and non-payments and so on. Are you providing that risk money or insurance money? Or is it that you're going to spread more revolution in countries where there is no revolution at this time? I always ask a provocative question, so don't mind.
No, that's okay. I think if you, I mean, again, every country will be different. Every country has sort of its development imperatives. Some countries raise financial inclusion as the thing that they need to tackle or they want to tackle, and then we try to be responsive to it. In other cases, there may be something else. But if you look just broadly, what are some of the things that we tend to gravitate to? You look at the fact that we have the ability to work closely with the government, so working with the regulators on the regulatory framework and making sure that they have as informed a sense as possible of how they, as a regulator or as a supervisor, as a government that also dictates policy across the line ministries as well, how they can facilitate the growth of these services to actually resolve concrete needs that they have in the country, and also to make sure that the services deliver real utility to consumers. And we can also work on the convening side. So I don't know if we necessarily touched upon it explicitly, but a common challenge in a lot of markets is actors that are key components to this ecosystem that aren't used to talking to one another, that aren't used to engaging in more open, candid dialogue with the regulator, for example, as well. And we can facilitate that sort of dialogue. And then we also, as most people I'm sure know, we have a lot of development programs ourselves in a range of different sectors. There are significant payment flows that are tied to that. In certain cases, we may have a program that focuses on increasing access to finance for smallholder farmers. So that would be sort of the development objective, and looking at how can we use digital financial services as a way to resolve that achieve that development objective.
So you provide the risk money or seed money?
I think it's hard to say what we would do in any particular situation, but there the objective would be how can we pair digital finance with the program that we have on the ground. And then one thing I should also note on that side is we're one of the many founding members of Better Than Cash Alliance, which is housed at the UNCDF, United Nations Capital Development Fund. And there the objective is getting institutions, so not just governments, not just NGOs, not just corporations, but any institution to digitize their payment flows. You have a fast-moving consumer good company like Coke, let's say, that has massive distribution network in a given country. You have a government that has social transfer programs. You have NGOs that have similar sorts of cash payment needs. All these are institutions that, if they digitize their payment flows, not only would we hope to see gains in transparency, gains in efficiency, and so forth, we're also helping make the business case for the delivery of more quality or better quality digital financial services, which would then have a long-term effect on their usefulness and their appropriateness for end consumers. And in that sense, because we have all these projects in a range of different countries, we have to do our own part to shifting away from cash.
So with that, I'd like to just quickly close by saying I was reading the latest annual letter from Bill and Melinda Gates, and essentially within the next 15 years, they say there will be more progress in human development and poverty reduction than any number of years in the past for our history. And a lot of that is largely due to innovations on the technology side and the potential for technology to promote financial inclusion and ultimately improve economic development in a number of these developing countries. 15 years versus all of human past history. It's pretty amazing. With that, I'd like to close. Could we give a strong round of applause to our panelists? Thank you so much. And hopefully, if they're around for a few more minutes, if anyone has any other questions. Thank you so much.
You can join some of the bar crew. We got more beers and pizza. And just to let you know, we don't hate women. Next event is actually going to be all about women. We're going to partner with WAMDC, Women Advancing Microfinance. And if you want to meet someone from there, Emma is here. Emma is right there, so you can ask her about the organization. And we'll see you then.
Okay. Great. That's great.